So what happened last night in the metals is a classic example of why you cannot trade this sector on chart patterns alone. So I'm going to look at the last month and a half here. A lot of subscribers, really started to panic as we came out of this cycle low because we didn't go long. And I have a pretty strict rule. Ever since we got caught trying to go long too late in an intermediate cycle last September, that I just do not buy long late in an intermediate cycle. It's just too dangerous. So let's break this down and see what actually happened. So, unless somebody picked the absolute bottom, which nobody did, but unless they picked the absolute bottom, you really only had 6 days to make money on this rally. This day right here was the day that the mining stocks popped back above the 10-day moving average and signaled the likelihood that a daily cycle low had formed. So, if you bought here, on the open, or if you bought on the close, like I said, you had 6 days to make money, and you had to pick this top perfectly. You had to get out right here. Otherwise, more than likely, you got knocked out of your position during this move down right here. And if so, then you didn't make very much money at all. And then this is where the games start to come into play. And I noted this before. We get this big rally that's completely out of character with what's going on in the sector, but it's convincing enough that it causes retail traders and hedge funds to buy again, and it causes them to buy right at the top, and the banks use that buying to unload either their longs or to increase their shorts. In this case, I think they probably just increased their shorts, and then the market goes back down, and traders end up selling for a loss again. So at this point, I would say that 99% of the people that tried to catch this daily cycle low and make money on the long side have now lost money. And so now we've got last week's rally again. The miners managed to get above the 10-day moving average, and this looks very convincing. And I heard many people calling this a daily cycle low and suggesting to their subscribers to get in. Again, I was wary that this was another trap. As I've said again and again, gold has to create at least one failed daily cycle, and it has to complete at least an ABC correction before an ICL is done. So, it seemed more likely to me that the bounce in gold, this bounce was setting up the A and the B wave, the counter trend rally, B wave up before a C wave down into the final low. And so I did not try and get people long during this bounce, just too dangerous. And this morning you see exactly why. We had a 25,000 contract dump last night in the blink of an eye. So it's clear this morning exactly what happened. This was bait to get people to go long, so the banks could use that buying to add to their short positions. And then this morning they pulled the rug back out from under everybody, and back down we go. And I think we're probably starting the C wave of this correction down, and that C wave should take gold below the May low. Like I said, we have to have at least one failed daily cycle, and the dollar hasn't even really started to rally good yet. So if the dollar rallies for at least 4 to maybe 8 weeks, this daily cycle in gold could last a long time, and we could go, I've been saying over and over, I think we're going to at least go to 1160 or 1180 before this is over. So, another example of why you can't trade this sector on chart patterns alone, because the banks will paint the charts to get you to do the wrong thing at the wrong time, and then they will make money off of you. And many people fell for it again last week. So I would be very cautious. I don't think I would, want to try and buy metals until gold at least breaks below this May low. Like I said, we need to have a failed daily cycle. So I would be patient here. Don't I don't think you need to be in any big hurry to try and buy the metals market. Let the dollar do its thing. It needs to have an intermediate degree rally, and the more than likely the weekly chart on gold needs to push this slow stochastics back down here to oversold, and and probably the soonest that could happen would be mid to late July. And the FOMC meeting is in late July, so my guess is that we're probably going to rally in the dollar until that FOMC meeting, and we're probably going to decline in gold until that FOMC meeting in late July. So I just don't think you need to fall for this crap that they pull, and they've done it over and over and over. There's just no need to continue falling for these setups and then have your money taken away from you. I would just be patient and wait till the FOMC meeting in July and see if we don't get the slow stochastics down here into the oversold level at that time. And I think that might be a much better spot to try and buy along the metals.